In today's fast-paced financial landscape, staying informed is crucial. So how can you gain insights faster than ever before?
Diving into our expert lineup, we have Emily Brown and David Lin here to decode the latest market trends for you.
With our AI-driven summaries, we've trimmed hours of analysis into concise, actionable insights that save you time.
From utilizing CO data to understanding housing market dynamics, you'll learn everything you need to stay ahead.
And buckle up. This is just the beginning. Let's jump into the insights that could reshape your financial strategies.
Remember, all insights are for educational purposes only, not investment advice.
Today, we're examining insights from Emily Brown regarding how traders can utilize commitment of traders' data to manage risks.
Emily emphasizes the importance of this data for understanding market sentiment.
Emily Brown notes that COT data provides vital insights into how traders are positioned in the market.
David Lin adds that recognizing these trends helps traders make informed decisions.
What does Emily say about market volatility and COT data?
Emily indicates that traders can better anticipate volatility by monitoring COT data trends.
Emily discusses how COT data can shape effective risk management.
The context provided by David Lin emphasizes its role in managing risks.
What predictions does Emily have for traders utilizing COT data?
Emily predicts that traders incorporating COT insights will enhance their risk management.
Emily Brown concludes that ongoing monitoring of COT data is essential for trading success.
David Lin reinforces that strategy adaptation based on these insights is key to navigating markets.
Today, we're diving into the analysis from the Reventure Consulting team on the current trends in the rental market.
Their insights indicate a significant uptick in competition for available rental units.
The Reventure Consulting team highlights a notable rise in the number of applications received for vacant rentals.
They note that this has led to noticeable competition, with multiple prospective renters vying for the same properties.
What are the main factors driving rental competition?
According to Reventure Consulting, trends such as increased relocations due to flexible work environments and economic challenges are key drivers.
Furthermore, many potential homebuyers are now choosing to rent because of current market conditions. What does the Reventure Consulting team foresee for the rental market going forward?
They anticipate that demand for rentals will remain steady, with a possibility of stabilization as supply increases.
In summary, the Reventure Consulting team highlights the need for renters to act swiftly in this competitive landscape.
Investors should concentrate on markets evidencing substantial rental demand to benefit from these trends.
Today, we're reviewing insights from analyst Emily Brown on the potential for market corrections following a recent rally.
Emily emphasizes that key indices may be overvalued and poised for a pullback.
Emily Brown suggests that many major indices are showing signs of overvaluation.
According to David Lin's analysis, this is significant, as rising Treasury yields could further pressure equity markets.
What does Emily say about the impact of rising yields?
Emily indicates that as yields rise, borrowing costs increase, which typically pressures risk assets like stocks. Emily highlights that the overvaluation of indices is becoming a concern for many investors.
Does this suggest a possible correction?
Yes, based on her analysis, a correction is likely as investors begin to reassess these inflated valuations.
What predictions does Emily make regarding market corrections?
Emily predicts a correction in the range of 10 to 20%, influenced by shifting investor sentiments.
Emily advises investors to closely monitor market trends and technical indicators as the situation evolves.
She also suggests looking into asset classes that can withstand inflationary pressures and market volatility.
Today, we explore the future of the housing market based on insights from Melody Wright.
Melody indicates that we can expect home prices to decline for the coming years due to several underlying factors.
What does Melody Wright predict about housing prices?
Melody predicts that housing prices will face significant declines, potentially lasting for years.
How do interest rates influence the housing market, according to Melody?
Melody suggests that higher interest rates limit affordability, resulting in fewer buyers entering the market. Melody highlights a noticeable shift in consumer sentiment, which is affecting demand for new homes.
So people are feeling less confident about purchasing homes.
Exactly. This growing hesitance can lead to a sustained decline in home purchases,
What kind of long-term predictions does Melody make?
Melody foresees a significant drop in home prices, indicating a prolonged downturn ahead.
What does Melody recommend for those navigating the housing market?
Melody advises potential buyers to monitor housing trends closely and reassess financial strategies.
Additionally, understanding market dynamics can help investors prepare for what's ahead. Today, we're diving into the analysis of market trends by David Lin and Emily Brown, focusing on fears related to market tops and the impact on investor behavior.
David Lin discusses the psychological aspects driving market dynamics, emphasizing how fear can lead to irrational decision-making among investors.
David Lin suggests that investor sentiment is heavily influenced by fear, leading to hasty decisions in attempts to mitigate perceived losses.
According to David, this psychological aspect can distort market behavior, causing overreactions to negative information. Emily Brown points out that accurately predicting market tops is inherently difficult, often leading to miscalculations.
Numerous historical examples demonstrate sudden corrections, so investors must be cautious. Emily emphasizes the risks associated with betting on falling prices, noting that short selling can be particularly dangerous.
As she explains, market dynamics can shift unexpectedly, leading to losses for investors who try to profit from declines without considering overall trends.
What predictions do David Lin and Emily Brown have concerning potential market corrections?
David anticipates that ongoing fears may result in corrections being more severe than expected, urging investors to remain cautious.
In conclusion, David Lin and Emily Brown agree that navigating the current market requires a strong emphasis on risk management.
They suggest that investors regularly review their financial strategies to adapt to the dynamic landscape.
Today, we're looking at Dr. Emily Brown's analysis of China's economic challenges and their effects on the global economy.
Dr. Brown explains how these issues can disrupt trade and affect economic stability worldwide.
Dr. Brown states that China's economic decline could significantly alter global supply chains.
As China experiences a downturn, trade partnerships will experience pressure, particularly amidst geopolitical strains.
Dr. Brown indicates that trade disruptions could raise costs for businesses on a global scale.
Such scenarios create inflationary pressures that impact consumers around the world.
Dr. Brown warns of escalating economic tensions that could destabilize markets.
This scenario may prompt a reassessment of diplomacy and trade agreements.
Dr. Brown explains that companies might diversify their supply chains to avoid over-reliance on China.
This strategic shift could reshape the global manufacturing landscape.
What future market changes does Dr. Brown foresee in response to these economic challenges?
Dr. Brown foresees considerable changes in consumer markets as businesses respond, with inflation remaining a crucial concern.
In conclusion, Dr. Brown suggests that businesses explore diversifying supply chains to maneuver through uncertain economies.
Furthermore, she highlights that investors should remain alert to possible market changes as global dynamics evolve.
What a wealth of insights we've gathered today.
Absolutely. Each guest brought something unique to this complex tapestry of economic trends.
I was struck by Dr. Emily Brown's perspective on China's economic hurdles. It's amazing how interconnected global markets really are.
And let's not forget David Lin's emphasis on psychological factors driving market behavior. That's a fascinating angle.
Oh, and Melody Wright's predictions about housing prices. An impending decline could change the game.
For sure. Adam Taggart's take on the broader economic implications really underscores the ripple effects we need to watch closely.
It's clear there's a lot for investors to consider. Caution seems to be a common thread throughout today's discussions.
Exactly. However, there's some divergence too. For instance, some predict a longer decline in housing markets, while others see sparks of stabilization.
And that lively debate about what primarily drives the markets, psychology or hard data, adds to the complexity.
If you found these discussions as valuable as we did, make sure to like this video and subscribe.
Your support is vital in bringing more expert insights directly to you.
Stay tuned. Our next video is diving into global trade dynamics, and you won't want to miss it.